We all know that crypto is the future of finance.
It's the future.
It's the future.
And this is why it's surprising that the decentralized finance niche has been almost completely forgotten since 2021. You see, it is the actual future of finance. Not surprisingly, people are starting to remember this ever since DeFi cryptos started rallying. And one of these has been Aave, a decentralized lending and borrowing protocol that could revolutionize finance as we know it. Today, we're going to tell you everything you need to know about Aave, including what it's been up to, what it's planning, and how high its Aave token could go during this bull market. Stay tuned. First things first. Nothing in this video is financial advice. It's purely educational content intended to inform you about Aave. And I'll also note that at the time of shooting this video, nobody on Team Coin Bureau holds Aave in their crypto portfolios, nor is this video sponsored in any way, but that should go without saying. Now, if you want to know which cryptos we're holding and which ones we're personally considering, then become a member of the Coin Bureau Club. Besides our portfolios and watch lists, members get weekly reviews of small cap altcoins they vote on, daily crypto alpha, and real-time insights in the members' Discord. You can learn more using the link in the description. Now, the last time we covered Aave was over 2 years ago, specifically in July 2022. So it goes without saying that a lot has happened since then, and we won't possibly be able to cover it all in this video. We also won't be going into the history of Aave or exactly how its protocol works, as that was covered in that video. So we highly encourage you to watch it. The link will be down below. Anywho, shortly after our last Aave update, the Aave DAO approved a proposal to launch Go, a decentralized stablecoin minted using collateral deposited into Aave. For context, Terra's UST collapsed in May 2022. And given that UST was also a decentralized stablecoin, not everyone was so excited about Go. This is probably why Go didn't launch until July 2023, when crypto market conditions were starting to improve and most of the skeletons had been shaken out of the closet, so to speak. Unfortunately, Go had a rough start when it launched. Not much was minted, and it struggled to maintain that dollar peg. Fortunately, though, Go's circulating supply has doubled in recent months, and it finally seems to be holding that peg. In fact, it's been trading above its peg, which suggests that there's lots of demand for Go coming from somewhere. After poking around the Aave protocol, we found the reason why. You see, at the time of shooting, you can earn an interest rate of around 15% for staking Go on Aave. On the flip side, the interest rate for borrowing Go is currently around 5% for regular borrowers, and less than 4% for those staking Aave. This means that you can earn 10% for borrowing and staking Go. Now, we're not sure how sustainable this is, but it seems another demand driver for Go is coming. Again, more on that later. Before that, back to the summer of 2022. Now, in addition to approving the Go stablecoin, the Aave DAO approved a proposal to temporarily pause lending and borrowing activities ahead of the merge. For reference, the merge was when Ethereum transitioned from a proof-of-work consensus mechanism to a proof-of-stake consensus mechanism, and it happened in September 2022. 2 months later, the Aave DAO temporarily paused lending and borrowing again when Avraham Eisenberg, the infamous Mango Markets exploiter, also tried to exploit Aave. The fact that Aave survived this attack underscored its resilience, but it also highlighted how much the DAO can control the protocol. This was highlighted again in January 2023 when the Aave DAO purchased Eisenberg's remaining debts after his failed attack. But it seems this news was overshadowed by the launch of Aave v3 on Ethereum. To clarify, Aave v3 launched on EVM chains in March 2022, but it didn't launch on Ethereum until January 2023. The Aave DAO's interventions continued in February 2023 when they froze its BUSD markets. To be fair, this was because of the news that Paxos had been ordered by regulators to stop issuing the Binance-branded stablecoin. The Aave DAO also temporarily froze USDC markets on Avalanche after the depeg in March 2023. More about that in the description. Moving on. Now, in April and May of last year, the Aave DAO voted to deploy on Polygon's ZK EVM and the protocol deployed on Metis, respectively. For those unfamiliar, Metis is an Ethereum layer 2 that was effectively founded by Vitalik Buterin's mom. Now, we actually reviewed it for our Coin Bureau Club members. Remember, the link is in the description. Anyways, in June 2023, Lens Protocol, a decentralized social media protocol created by the team behind Aave, raised $15 million from various crypto VCs and prominent crypto personalities. Lens Protocol is the back end for various social media dApps. And one of the most exciting of these is Favor, which you can even download and use right now. The Coin Bureau team invested in Favor, by the way, full disclosure. And by the way, if you're enjoying this video so far, smash that like button and subscribe to the channel and ping the notification bell as well so you don't miss our next altcoin update. Now, over the summer of 2023, Aave almost experienced what could have been its first shortfall. Now, some of you might recall that Curve Finance founder Michael Egorov had used his CRV tokens as collateral to take out enormous loans across various DeFi protocols. Thankfully, he topped up his collateral and repaid some of his loans with the help of other crypto whales. Had he not done that, though, then it's possible that his CRV collateral would have been liquidated. Now, under normal circumstances, that wouldn't have been an issue, but in this case, the liquidity of the collateral was low. In plain English, the value of Michael's CRV collateral was, say, $100 million. But if you tried to sell $100 million worth of CRV, you'd end up with, say, $60 million because of price loss from the actual selling itself. And this would have meant that Aave wouldn't have been able to sell Michael's CRV holdings to get enough to repay those lenders. The result could have been a collapse in the Aave token, as its purpose is partially to act as collateral for the entire protocol when there's a shortfall. To be clear, the only Aave at risk of being sold to cover a shortfall is staked Aave. The staking yield is compensation for the shortfall risk. It's a pretty cool feature when you think about it. Anyhow, in November last year, the UK company behind Aave rebranded to Avara and acquired a Californian software company called Los Feliz Engineering, which had been building a Phantom-esque Ethereum wallet called Family. FYI, Phantom is the top wallet on Solana, and it's known for its really slick UX. In theory, the announcement was supposed to be bullish. In practice, however, it didn't happen at the best time, since Aave had just discovered an unspecified vulnerability affecting its protocol on multiple chains. And the simultaneous rebranding gave the impression that Avara had been neglecting its flagship protocol. Case in point, Gauntlet, a crypto risk management firm, ended its 4-year relationship with Aave this February. And many have argued that this termination was part of Gauntlet's pivot to focusing on a competitor to Aave. But the Gauntlet team explained this was due to dysfunction in the Aave DAO. Specifically, Gauntlet, quote, found it difficult to navigate the inconsistent guidelines and unwritten objectives of Aave's largest stakeholders. Now, many have assumed that this is a reference to certain Aave whales. Consider, for example, that Chainalysis found that 90% of voting power in DAOs comes from just 1% of token holders. The tensions between Aave and its DeFi partners continued in April when the Aave DAO considered removing DAI as collateral from the protocol. To bring you up to speed, DAI is a decentralized stablecoin issued by another DeFi protocol called MakerDAO, which had added Ethena's EUSD as reserves for DAI. Now, EUSD is not a stablecoin per se, but a, quote, synthetic dollar and collateralized cash and carry trade. Now, if that sounds complicated, that's because it is, and it led to concerns in the Aave community that DAI could lose its peg if there was ever an issue with EUSD. And this is particularly because large amounts of DAI were being minted using EUSD as collateral, and obviously DAI could be used within the Aave protocol. In the end, it looks like the Aave DAO voted to make some adjustments to DAI's risk parameters. Aave and MakerDAO subsequently partnered to help bring TradFi to DeFi, seemingly marking the end of the feud. Do note, though, that MakerDAO recently rebranded to Sky, hence the title you see in the image in the video. Now, where were we? Yes, May. In May, the Aave DAO tabled a proposal for the fourth version of its protocol, which we'll come back to a bit later. Aptos also tabled a proposal to launch a version of Aave on its Move-based blockchain, something significant given that Aave is only available on EVM chains. More about Aptos in the description. Now, incredibly, Aave actually benefited from the crypto market crash at the beginning of August. You see, the protocol reportedly raked in over $6 million in collateral liquidation fees. Then just a couple of weeks later, Aave reportedly hit a record high in weekly borrowers, over 40,000 of them. Aside from the fact that more users mean more fees for Aave, more borrowers also suggest that lots of crypto whales are feeling bullish. After all, the main reason why people borrow using their crypto as collateral is to speculate on more crypto. And more borrowers therefore means more speculation, which is of course a bullish indicator. Speaking of bullish, the Aave token has been on a tear over the last month. It's up almost 50%. Even though there's evidence that institutions have been buying Aave due to its fundamentals, it's possible that the bigger demand driver has been those aforementioned yields for staking Go. Remember that the interest rate for borrowing Go is less than 4% for Aave stakers, while the staking rewards for Go are around 15%. Buying and staking Aave not only allows DeFi whales to earn a bigger yield, but also get some gains in the form of Aave's price appreciation, which is driven partially by speculation. If this is the case, then Aave could start to lose steam once the supply of Go hits 140 million. And this is because the Aave DAO appears to have put a minting cap of 140 million Go. As you can see, 120 million Go has been minted already, suggesting there's only around 20 million more that can be minted. Once the max supply has been minted, there won't be any incentive for people to buy and stake Aave to take advantage of the lower interest rate. But this is just the demand side of the equation in the short term. In the longer term, it's likely to be supercharged by Aave's own staking rewards. And this is where things get a little complicated, so bear with me. To refresh your memory, the primary reason why people lend their crypto on Aave is to earn yield on that crypto. Aave's lend-in yield is, in a sense, competing with the yield on other products inside and outside of crypto, like regular staking and bonds. To put things into perspective, yields on liquid staked ETH are currently around 3%, and the yield on the 2-year treasury is around 3.5%. Meanwhile, the yield for staking Aave is around 4.7%. And this means it's higher than its competition, and it's going to be even higher very soon. And this is due to a combination of the fact that more and more ETH is being staked, which of course leads to lowering the staking yields. At the same time, the Fed is expected to begin cutting interest rates in due course, which will lower the yields on US bonds. And if the crypto market keeps rallying, there will be more borrowing. And if there's more borrowing, that means that Aave will generate more fees. And in case it wasn't clear enough, Aave staking rewards are derived from Aave's protocol fees. And this means that Aave staking rewards will rise while staking rewards for competing products will decline, all while Aave rallies. Naturally, this positive feedback loop is fundamentally caused by an easing in financial conditions and the resulting rally in risk assets like crypto. As the de facto liquidity protocol for all of crypto, Aave and its token are perfectly positioned to capture fees from the speculation, at least on the EVM ecosystem. But what about the supply side? Well, historical data from CoinMarketCap suggests that 1 million Aave have entered circulation over the last 2 years. Assuming an average price of around $100 during that time period, that's a maximum sell pressure of $100 million, which is spread out over 24 months, which is not much at all. When you notice that Aave has practically been trading sideways for almost 3 years, you start to realize just how much potential this crypto project still has. With a market cap of around $2 billion, Aave is 5 times undervalued relative to its total value locked of $11 billion, though some would debate the validity of this valuation method. In any case, it's clear that Aave is wildly undervalued relative to its fundamentals, and to be honest, this could continue to be the case. That's just because DeFi is a hard thing for retail investors to wrap their heads around. Not only that, but it seems that retail investors are put off by Aave's price tag. This is actually something we noticed in our previous Aave updates. We explained that Aave was undervalued, and the response in the comments section was that it wasn't because it already had a high price tag in the hundreds of dollars. And this is despite the fact that it's ultimately the market cap that determines potential. As all of you will hopefully know, the smaller the market cap, the more a crypto can pump or dump. And that's because the smaller the market cap, the less money it takes to push its price up or down in percentage terms. With a market cap of 2 billion, Aave is a large cap, but it still has potential. If DeFi becomes a big narrative during this bull market, Aave could pull a 6x. And this is very likely if regulations are passed that make it possible for institutional investors to get more involved in altcoins. Some of you will know that Aave has actually been trying to onboard institutional investors. And if you want to turn that potential 6x into a potential 60x, then check out the Coin Bureau deals page. You see it's got trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on the best crypto exchanges. You see, these deals, they won't be around for long and are only available for Coin Bureau viewers. So take advantage of them while you still can, using the link in the description. Now, whether Aave can pull a 6x ultimately depends on its upcoming milestones. Now, as a DAO, Aave technically doesn't have a roadmap, but its upcoming V4 upgrade is, for all intents and purposes, a roadmap. Per the proposal, Aave V4 will begin testing later this year and won't be released until mid-next year. As you can imagine, Aave V4 consists of a long list of technical upgrades, but here are some of the highlights. The first is a unified liquidity layer, which to our understanding will make it possible to just deposit crypto into the protocol without having to find the actual pool, and this will of course streamline user experience. The second highlight of V4 is making it possible for interest rates to change more aggressively in response to changes in supply and demand of crypto in a pool. This is presumably to protect the protocol from shortfall events by discouraging borrowing and encouraging lending more intensely. The third highlight is the introduction of a liquidity premium. Now, as you might have guessed, this pertains to large loans made against illiquid cryptos. Liquidity premiums will make it easier to borrow against more liquid cryptos and more difficult to borrow against less liquid cryptos, so it's more protection for the protocol. Other highlights include the automatic offboarding of certain cryptos and automated treasury management. This is significant, as Stanny mentioned in an interview that V4's purpose is partially to bring Aave to a state where minimal governance is required, and this is why some have speculated that V4 will be Aave's final version. And that reminds me, Stanny also seemed to imply that Aave, or rather Avara, is planning to introduce the Go stablecoin to the Lens protocol and its front ends. Logically, this would create an organic source of demand for Go that's hopefully not reliant on crypto market conditions, which would ensure its peg stays put. And in case anyone is wondering, Stanny neither confirmed nor denied whether a token is coming for Lens protocol, but he seemed to suggest that this will be up to the DAO, which launched its governance last year. It's safe to assume that a token will be launched only once regulations become clearer in the US and elsewhere. Aave's biggest upcoming milestone, however, relates to its expansion to non-EVM chains. In a fireside chat with Aptos co-founder Muhammad Sheikh, Stanny revealed that Avara is extremely bullish on the Move programming language, and that he believes Move will be the future of crypto development. This is a bigger bombshell than you think. You see, the whole reason why Aave launched on Ethereum and why it's been focused on the EVM is because that's where all its users and capital were. From Stanny's perspective, this is starting to change, and he seems to believe that all the capital and users will move to Move-based blockchains like Aptos and Sui. There's just one problem though, and that's that Stanny admitted this means that Aave developers will have to code everything from scratch, which won't be easy. It doesn't help that Avara continues to be focused on Ethereum's ecosystem and that many of these Move-based blockchains already have decentralized lending and borrowing protocols that are likely to maintain their dominance even if Aave comes over. And this, of course, brings me to the challenges that we foresee for Aave. And the first is that aforementioned competition from other DeFi protocols. To be clear, Aave has been on the cutting edge of DeFi since its inception and continues to raise the bar for every DeFi protocol in crypto. Period. The problem, though, is that this has been the case when it comes to Ethereum's infrastructure. The fact of the matter is that the user experience on Ethereum pales in comparison to what can be found on next-generation cryptos like Solana and Near. And as we predicted, Ethereum has become Aave's Achilles heel. The good news is that Avara isn't giving up on Ethereum. On the contrary, it's looking to help build out the user-friendly infrastructure required for Ethereum and its protocols to compete. The bad news is that Stani can see that move-based blockchains are probably the future, and the more it spends time trying to improve the past, the further it will fall behind. This ties into Aave's second challenge, and that's development. You see, unlike most DeFi protocols, Aave is truly decentralized. I mean, even its front end is hosted on a decentralized protocol. The problem is that decentralization makes it very hard to adapt, as everything needs to pass through a DAO vote first. If we're honest with ourselves, the main reason why crypto projects try to be decentralized is so that they can evade regulatory scrutiny. So, what happens when regulations are no longer a threat? In that environment, the most centralized cryptos can get ahead because they can evolve faster. And this is exactly what we've seen over the last few years. Everyone knows next-generation smart contract cryptos are more centralized than Ethereum and its peers. But again, this gives them the ability to implement upgrades in a faster and more coordinated fashion than decentralized cryptos. And this is why it's going to be very interesting to see how Avara handles expanding Aave to different blockchains. Depending on the circumstances, they could decide to launch a brand new lending and borrowing protocol that isn't dependent on the Aave DAO, so they can stay ahead of the competition. And this relates to Aave's third challenge, and that's regulation. Now, we couldn't help but notice, but some of the information we used in our previous Aave research had been scrubbed, such as the conversion of its previous Lend token into Aave that happened in 2020. Now, this could be coincidence, but we don't think it is. And that's because in May 2023, a crypto exchange called Backed delisted over a dozen crypto tokens, including Aave. At the time, there was widespread regulatory scrutiny from the SEC, and the scrutiny only seems to be increasing with DeFi. If you need evidence of this, look no further than the recent Wells notice that went to Uniswap. To be blunt, DeFi seems to be the target for regulators around the world. DeFi lending and borrowing protocols seem to be the biggest targets, as they allow the one thing that central banks and governments cannot afford: a free market around interest rates, the ability to borrow and lend without restrictions and oversight. It's possible that the limitations on Aave's governance in V4 are partially motivated by an attempt to evade whatever moves at regulatory capture could come. With a bit of luck, positive DeFi regulations will be passed in major jurisdictions, but that will probably supercharge the centralization competition I just talked about. Regardless, there's a reason why Aave is the second largest DeFi protocol. It is the undisputed blue chip of the niche, and its dominance is unlikely to be challenged for the foreseeable future. And this is mainly because of Ethereum, which will likewise continue to be the dominant ecosystem for the time being. It's easy to forget that every crypto project and protocol faces challenges of its own, even the biggest ones. And the fact that almost none of them held up as well as Aave during the bear market is proof of the fact that it's one of the best designed crypto projects ever made, and it continues to hold this title. But let's be real, if you're looking for a 10x or a 100x, you're probably going to find it somewhere else. And everything we've discussed today suggests looking at Aave's competitors on move-based blockchains. And if you don't know which ones these are or how to research them, then you already know where to go. And that's all for today's video. If you learned something new, then smash that like button to let us know. And if you want to keep learning about promising altcoins, then be sure to subscribe to the channel and ping that notification bell as well. And if you want to help others learn about Aave, well, then share this video with them. As always, thank you very much for watching, and I'll see you in the next one. This is Nick, signing off.